Hello guys, still Prophet here. So in this particular video, I want to thoroughly teach you guys or explain in a nutshell, all right, how to use an order block. Okay, like how to identify an order block, understand, like institutional traders for high probability setup. Okay, now let me walk you guys through purpose of this video again. So in this video will be like I'll walk you guys through number one, what an order block really is. Okay, now how to identify a valid order block on your chart. All right, now how to identify a valid order block on your chart, and how to know if an order block has been mitigated or not. All right, now, and also how to use them as your entry tool. Okay, and most importantly as well, how to identify a fake order block that can probably trap retail traders. Okay, how you can probably identify fake order blocks. Okay, so it actually works for kind of market. It works for the crypto market, forex market, and probably synthetic traders and stock traders are probably. All right, now so let's. All right, okay. So, bro, if you are, whether you are a beginner or you're already trading SMC, but you don't actually know how you can identify order blocks to the full length, probably this video is for you. Okay, so don't forget to like, subscribe, right, and just hit the bell or the notification icon so you don't miss any of my content or any videos I will drop in the future. All right. So without more question, let's dive in. So first of all, sorry, yeah, we're dealing on order block. So there are probably different kind of definition of an order block. Okay? Yeah, there are different kind of definition of an order block. They are kind of much, but let me walk you through each and every one of them. All right. Now, basically, an order blocks, there are levels in your chart, or there are levels, key levels on your chart. Where bank or large institutions execute their buy or sell orders, all right, causing a strong movement from that particular zone or level. I don't know if you understand. Let me come again. There are levels on your chart. There are key levels on your chart where institutions, large institutions like the bank and like these big guys that trade with big money, they execute their buy or sell orders on your chart. Do you understand? So probably also you can also say an order block is probably a last bearish or bullish candlestick before a significant move in the market that probably breaks structure. Do you understand what I mean? So something like this, let's say that, okay, the market is an option here. Do you understand? And then from here, the market just had a strong impulsive move and it broke the structure. Now, the last bullish candle probably before this impulsive move is another block. You understand? So we're still going to, like we said when we did the first explanation, we said there are key levels on the chart. Don't forget that there are key levels on the chart. Large institutions like the banks execute large buy or sell orders. You understand? causing a strong impulsive move in from that zone. To the start, as you can see in this particular explanation, you can see that okay, from this point, like price had an impulsive move from this zone. So there were a lot of sell orders here that caused the price to break structure. Do you understand? So this is another block, example of another block. So this is a bearish order block. So the same thing applies to maybe the market is probably just in the market was actually on a downtrend. Then there was an impulsive move to the upside, breaking the structure. Okay, breaking the structure. Now the last bearish candle here before that impulsive move or impulse to the upside is a bullish order block. You understand? Now I want to look everything on the chart, but I'll just make an illustration for now. Okay, so let's come again with everything that we discussed. Yes, say number one, when we're doing the explanation, let me see if I can write it down for those, because some of us might not understand, might not I believe some of us here are not from my country and they might not hear my accent very well. So let me come again and more slowly. I'll go with that. Now, we said other blocks, they are key levels on our chart where institutions like the banks execute large orders, either buy or sell, causing a strong impulsive move from that level. All right. So probably also, you can also say that the last, in case of a bullish, case of a bearish order block, you can say they are the last a bullish candle before this bearish move, impulsive move. And in case of a bullish order block, you can say is the last bearish candle before this impulsive move. Do you understand? I believe that is well understood. Okay. Now, but before let's look at some attributes of another block. Like, you cannot just say the last candle before this impulsive move is the other block. There are some attributes that the candle need to possess before you can say, okay, this particular candle is another block. You understand? We're just doing an illustration here. When we are done with this, all of the illustration, we'll go to our chart and identify all of this. All right. Okay. Now, the reason one of the main reasons why I'm doing this video again is, if you guys can recall, last week I made a video when we were talking about structures and liquidity. In case you missed that video, you can go and watch it. Right. When we did that video, I told us everything about how to structures to look out for when taking a trade. You understand? We highlighted everything from major structure, knowing the direction of the market, to liquidity sweep. Then we talked about some liquidities, like I think we talked about transactional liquidity and structural liquidity and all of that. Then after that, we talked about POI. You guys can recall. So the purpose of this other block video is for you to know the valid POI for that structure, like when you are trading that particular structure. So other blocks normally they are used for, like, they have levels in the chart where you can probably you can buy or sell from. Do you understand? So in the case of that video I dropped that day, I didn't explain POIs for you guys in depth. So you can use an order block as your POI, and this is how you can use the other block. So that is what we are doing now. That is how we are treating other block. So in case you missed the video, go and watch it. And in case you have watched that video, then cool, you can just watch this continuously so that you know what some POIs that you can use. All right. Okay, let's proceed. Now we're talking about some attributes. We said there are some attributes of another block that another block, like before you can call a candle an order block, a valid order block, there are some attributes that you need to possess. Do you understand? Before you can say, okay, this particular candle is another block. You can't just say, look at a candle, probably it's the last bullish candle before this bearish move, and you say it's the other block. No, there are some things that you need to possess before you can say, okay, this candle is another block. Do you understand? Now, number one thing that we need to look at for, now that candle must have, like, it must break structure. Like the candle that caused the impulsive movement must break structure. This is the structure I'm talking about. BOX. Now the impulsive move must break structure. There's number one. It must break structure. Number one. Then number two, there must be a liquidity sweep. Let me tell you what that means. The candle must sweep its previous candle high. So remember, we are doing an illustration here. We're going to see everything on the chart. All right. So let's assume this is let's talk a bearish order block, for example. The market is on the market is going up. Pay attention. Okay, just use this as a candlestick. You can illustration here. Now this is the week. Let's assume this are the week. Okay, then this is the week. I will have something like this, and then an impulsive movement to the downside, like this. Now remember, I was talking about something just now. I said one of the attributes that before you can say, okay, that candle is another block, it must result that impulsive movement from that candle, or from that after that candle, it must break structure, like what we explained here. It must have a liquidity sweep, must sweep the previous candle high. So if this is we are looking at this, let's say this is the other block candle we're looking at for this last candle here, it must sweep this candle high. Do you understand? This candle high that we're looking at for as another block must sweep the previous candle high. That is number one thing. Do you understand what I mean? So if this is the candle, this is a previous candle high. Yeah. It must sweep the previous candle high. Do you understand? It must sweep the previous candle high, like what this one did now. Are you guys with me? That is one thing. And also, it must have a proper imbalance or a fair value gap. All right, it must have a proper imbalance or a fair value gap. In case you don't know what a fair value gap is, that is not the purpose for this video, but I will explain in another video. All right, what a fair value gap is. But let's just do it a casual or the standard of the fair value gap is. All right, so let's do a casual explanation of what a fair value gap is. Now, all right, so this is the other block candle we're looking at for, and then let's say, okay, now let me this is a fair value gap. The distance or the space between this other block candle low and this third, not this second, this third candle, the high, The space in between is your fair value gap. So this candle must have a valid fair value gap or an imbalance. If this candle, probably, let's say this is a low of this other block candle, and then this candle mitigated this whole candle, this candle wick, like this other block low, the low of the other block, then there's no imbalance here. There must be like there must be a space between the high of this third candle and the low of the other block candle. The space between them is the imbalance or a fair value gap. That is the gap between them, the gap in between the low of the imbalance. The low of the other block candle and the high of the third. That is this third candle. 1, 2, 3. This third candle here is the gap in between is the fair value gap. So number one, for another block to be called, for a candle to be referred to be another block, number one, after it is formed, the impulse movement must break structure. 2, there must be a liquidity sweep. That means the high must sweep the previous candle high. Understand? And also, lastly, there must be a fair value gap or an imbalance. Do you understand now? So that is basically it. Now let's go and look at some example on the chart. Okay. So let's look at this Ethereum. I posted this Ethereum stuff yesterday. Is it this one? Let me see. Okay, yeah, this is it. All right, this is it. Though we didn't take this trade, but I posted it on, like I posted the aftermath on Telegram. Though even though we didn't take it though. Let me try and look for a trade that we took. I can make an example of this Solana, for example. Let's look at this Solana. So probably this Solana actually missed an entry, but I took the trade. But it missed an entry just a little. But anyways, let's look at why. Let's look at the 45 minutes or 30 minutes. Okay, 45 minutes time frame. Now, this is a liquidity sweep here from the trade I dropped for us. Okay, anyways, let's know if we're talking about other block. Let's just focus on the other block issue here. Look at this candle. Before this impulsive move came to this point, as you can see, the market went to as high as this point. Market went to as high as that point. So it is this candle. This was the last bearish candle. Yeah, as you can see. Understand? That is the last bearish candle. And now look at it. The candle. We're talking about this candle now. This candle here. That I just highlighted. Now look at that candle. You can see that it swept the previous candle low. This was the previous candle low. This candle swept the previous candle low. You understand? It have met the first criteria. Number one, it was that candle that resulted to this break of structure, which is the POX. Do you understand? Number two criteria has been met. There is the proper sweep of liquidity. There is the candle resulted to a break of structure, and then also there was a proper imbalance. Understand? Now this is the high of the candle, and this is the low of the third candle. So this is the imbalance. From year to year, the gap between year to year is the imbalance. So the trade I dropped yesterday on Solana, this was the entry. I dropped the entry from, like, this was the entry I dropped on the, what is it called? Order block. Understand? But the market didn't enter the order block. And for those that understood structure and liquidity, you understand why the market didn't actually enter the order block. In case you don't know, go and watch those videos I dropped. You understand what I mean. You understand? The market just the market didn't enter the order block. You understand? As you can see, for those that even know how to use fair value gap as a trade entry, as you can see, this fair value gap, the market started reacting from this fair value gap. Understand? It was a reaction from the fair value gap. Now, the reason why the market didn't actually enter this order block yesterday, this was a structural liquidity that the market created. For those that understand what structural liquidity is, when we are doing structural liquidity, the market just swept the structural liquidity as you can see. The market swept structural liquidity on. If you go to the 15-minute time frame, so immediately you see the market sweeping structural liquidity, and the market have been started consolidating and making some form of movement above. We just know that the market wants to start running from there. That was why I entered the trade yesterday. Now, naturally, this was the entry. Let's highlight that. Saying, guys, our entry was supposed to be 158, 156 something, but the market swept structural liquidity of 157. I saw that the market wanted to start moving, so I just entered the trade right above structural liquidity. You understand? Okay. Anyways, we are in the case of an order block here, not structural liquidity. So you guys can see now, this is a valid PR or an order block. Okay. Now let's see if we can let's erase everything. I'm looking at for this zone, because it was this zone that pushed the price up to this point. Let's see on 15 minutes time frame, is just any. All right, there is none. Naturally, I would have been I'm actually looking at this candle before. This candle, this last bearish candle here, before the impulsive move to the upside. Naturally, the candles fulfilled some of my criteria. One, it was a candle that pushed the price to add a break of structure. So we can actually use this as structural liquidity, even so. But there was no previous candle sweep. It didn't sweep, what is it called? And there's a proper imbalance. There's an imbalance here. The gap, there's an imbalance there. Okay. But I can actually still use this as a this candle here, this big candle is supposed to be my order block. Naturally, this big candle is supposed to be my order block, because it swept all the liquidity it swept all this low, the liquidity of all these lows. All right, but then there's no imbalance and all of that in that candle. So there is a shift in order block here. I'm going to use this candle as our order block. For those who don't understand, there are sometimes where there's sweep in order block. There's a shift in order block. All right. Let me tell you, when in a situation where a candle swept, it meets all the criteria, there's a sweep of liquidity, but there's no imbalance. There can be a shift in order block to the next candle, if the candle have all the attributes. All right. So the same thing happens here. This candle is a valid order block. So I'm going to wait for price to come here and see how we're going to react from that zone. All right. So that is it. Let's go back to what we're doing. Now, from what I said they are bearish order block while they are bullish order block, and I think I explained that already. All right. And I said this let's say the market is in an uptrend, this, and there is boom, there's an impulsive movement that broke structure to the downside. All right, now the last bullish candle here that possesses all the criteria that I talked about is a bearish order block. So you understand? So here probably we expect the market to go back to sell from. You understand? So that is a bearish order block. And the same thing applies to, let's say the market is on the downside and you have something like this. Price broke structure, and then this last bearish candle, the last bearish candle before this impulsive move is a bullish order block, while the last bullish candle before the bearish move is a bearish order block. Do you understand? All right, that being said, now before we call it a day, let me quickly explain something to you guys. You know, I was when I was doing our video description, I said I was going to walk us through how to identify fake order blocks, like order blocks that we feel that will likely fail. Do you understand? Like order blocks that can that will fail or probably trap retail traders. Do you understand? Like how to identify fake order blocks that can trap retail traders. Okay, now let's quickly look at that. Now, before we do, let me bring something to your notice. Before you identify a level as let's take for example something like this. Market is going up, then you have something like this. Now pay attention. This market had a breakout structure here, met the first criteria, all right? Then the last bullish candle before this impulsive move to the downside is the order block. Now in an event, pay attention very carefully. This is where liquidity comes into play. In an event where the market start going back to that zone, to that order block, which is your POI, and there is no internal high that is close to this order block that the market can sweep before entering the order block, the market will use that order block as liquidity rather. So that is some in an event something like this, you see the market going up, sweeping the whole place. Understand? Taking out all the stop losses of those that are short in here before it start falling. You understand? So in that event, this order block will fail. You understand? In an event where there is no internal high that is close to that high that the market can sweep before tapping into that order block, the market will take out that order block, which will not turn into a breaker block. For those who don't understand, another block that fails is called a breaker block. Okay. So this is how you can identify order blocks that can or will likely fail. So before you can say, okay, I want to start taking an entry from this particular order block, which is my POI, ensure that there's an internal there's an internal high that is close to that POI that the market will sweep before entering that order block. Do you understand? Which is why when you're doing on structure and liquidity, then if you can recall, I said always make sure that there's a structural liquidity. It's close to the POI. You understand? Structural liquidity that the market can take out as liquidity, enter the POI, then it is valid. So in an event where there's no liquidity, structural liquidity or any general liquidity close to your POI or that order block will likely fail. The market will likely take that order block out as liquidity or inducement before it start falling. You understand now? So that is basically one of the ways you can identify an order block that will likely fail as a retail trader. Okay, I think that should be all for now. That should be all for now. All right. So I believe this video, you should be able to identify an order block after this video. All right. So just make sure that you understand all the parameters. One, that candle must, the candle that created the impulsive move, there should be a BOS, which is a break of structure. Understand? And one, the candle must sweep the previous candle high or low, depending on the kind of candle, that bearish or bullish candle, or bullish or bearish order block. It must sweep the previous candle lows. And also, there must be a valid a fair value gap. A valid fair value gap. Do you guys understand now? All right. So that is it. That is it. I'll see you guys in next video. Okay, probably in the next video I might start talking about a fair value gap for those that don't understand properly what a fair value gap is, or how you can identify it. I just did a tip of it because we are dealing with order block now. Okay, so I'll see you guys in the next video. Please, if you have any question, drop there in the comment section. All right, and like I said, don't forget to like, subscribe, and hit the bell icon, so when I drop any of the videos, you don't miss out on any of this content of smart money, because I treat smart money concept, and all my content will be related to smart money. So always make sure that you are subscribed and your notifications are turned on, so when I drop these videos, you get notified and get updated. All right, so guys, I'll see you guys in the next video. Stay blessed.